Hey guys, how y'all doing? Let me know when you can hear me. We can get started. I mean, you can see my screen, all that good stuff. Sweet. Yeah, we can get going. May sound a little stuffy, but we will get through it. Alright, so, yeah, welcome Monday, 10:16. We're going to go through the SPX game plan, going to go through swing game plan. I know it's 9:17, so we will go rather quickly through it, try to get it all in through the bell, but we'll at least go through SPX, and then, you know, single stock stuff may take us through the bell. So, right, everything Gamma Edge starts with our SPX game plan. Here we go through SPX-A, SPX-P, full complex, and the 0DT complex, right? We separate SPX-A and SPX-P because the characteristics of those are different, right? SPX-A, which we can get to right here. This is, so we're looking at the monthly expiration, 10/17, but SPX-A, that's your monthly or quarterly expirations. Kind of where your longer term, slower moving capital is positioning. So as opposed to SPXP, which is your daily, your weekly, your 0DTE expirations, generally more short term traders, that money's going to turn over a lot rapidly. So right, they're kind of two different classes of investors, both telling us you know, kind of important things based off of what they're doing, right? So SPXP is generally going to shift before SPXA, but right, if moves are going to stick, then they need to flow through SPXA. So that's why we always start with SPXA. Gives us kind of a nice broad, it's the cruise ship, right? So, right, call dominated above the spot price. That's the important thing to note. Looking at our transition zones, 66.85, noting that is a slight shift up from last week, which was 66.65, right? So that's just the key level that we want to maintain here. Right, everything else is certainly call dominated looking at that complex. Right, guys, and we have detailed notes throughout the kind of supplementing each image, all that good stuff. So just skimming through that real quick. Yeah, right. I mean, the key thing there, right? A move above 66.85, an advancement of the transition zone, right? Is an expansion of deltas, and you know the TLDR is bullish. Hitting a couple supplemental tools real quick. Looking at true zeros. Right, key thing here to note, spot price is trending above both of the true zeros, right? Remains bullish on the SPX-A complex, so kind of the first two factors we've gone through is telling us things look fine here. The true delta, true gamma zero lines, these are progressing higher day over day, also bullish as well. Looking at the GEX ratio now, right, this is similar to a put call ratio. It's measuring cumulative call gamma relative to cumulative put gamma in the structure. Key thing there as what's a differentiator and we think makes it superior to kind of just a blanket put call ratio is because we're using gamma as the input, that has a time component to it. Because remember, gamma is most sensitive at the money and closest to expiration. So kind of as us traders here, we care about kind of that short-term nature of positioning, and this is really what the GEX ratio is really good of capturing and just telling us kind of what the overall kind of environment is, right? If it's getting more bullish, less bullish, more bearish, less bearish, all that good stuff. So just looking at this, right, we're above 1, so net, that just means that call gamma is greater than that of put gamma, so more call speculation there. You know, from the September 26th low, when we've had a little bit of rally, we've continued to expand higher, right? So that is good to see. From Friday, however, just keep in mind that that's kind of unchanged. So generally what we want to see is this ratio continue to expand higher as we continue to progress higher. And as we start to get kind of a stalling out, this ratio a lot of times actually tends to kind of lead price, whether that be higher or lower. So this is just a really good thing to pay attention to on a day-to-day basis, just understanding kind of what the changes are telling us. But right now, right, it's above 1, not collapsing here. So that's fine. One thing to note is 1.38. Based off our back testing, I forget the numbers, 1.2 or 1.4, but either one, we're pretty much at that level or above the level. So that's just something to keep in mind too, just in terms of kind of market awareness that, as we noted here, perhaps there is a short-term topping in place. Not necessarily actionable, right? There's more of just like situational awareness here. Some ginger shots. Looking at delta balance here, right? The good thing about the options market is they are inherently forward-looking. Just given that there's future out expirations, we can understand how folks are positioned out in time. So that's exactly what this is telling us. We have the next 5 expirations that we're looking out, that we are looking out in time. So we have the red line is the left-hand plane, which is below spot price. The green is the right-hand plane, which is above spot price, and then the blue is just the net of those two. Right, just reading through the notes real quick. Yeah, so I mean, the first thing to note, right, is just net delta balance. That line is pinned at 1. Keep in mind this is an oscillator between 1 and -1. So with it being pinned at 1, like that's the most bullish that it can get. Keep in mind too, right, these are monthly expirations, so we're still looking at the SPX-A. And the thing that we like to look at here is kind of shape changes, like changes in the shape from one day to another. Again, just kind of a visual of how, you know, positioning may be changing out in time. Right, but really not a ton else to say here right now. Everything looks fine. If you guys want to go read those notes in detail, that's fine too. Moving along to SPXP 925, we'll get going here. So again, as I was saying before, this is the cruise ship. So this is where your short-term traders are. This is your daily, your weekly, 0DT expirations, all that good stuff. Right now we have all expirations are turned on here. So just getting kind of a nice overarching view of the short-term structure. Looking at SPX real quick, we're at 67.37, so we are well above the transition zone. That's good to see. Kind of 67.15. That's the top of the DEX and the GEX transition zone. So that's going to be the key level that the bulls want to see maintained, right? It was 66.85 and the SPX-A 67.15. So again, first line in the sand is going to be that 67.15. Yeah, so not a ton else to say there, right? Just strong call dominated environment as a point in time. That's a bullish snapshot. Same thing, go through the same thing. SPXP, looking at the true zeros, starting to flatten out a little bit, but you know, price is above those, so you know, net that is fine. That's bullish. Right, the thing we want to see though is as price is making all-time highs, the ratio, the true delta, true gamma zeros are making new highs as well. So just want to be cognizant of that. Like I said, they're going a little bit sideways, but net, you know, it's fine. They're at least not rolling over here. Right, good important note here. We see no reasonable rationale to be shorting the tape here. So just keep that in mind. Looking at GEX ratio again. Above 1, had kind of a fairly substantial drop from Thursday, Friday into today. Yeah, I mean, we were a bit stinted here, a bit extreme, as we were noting there. So yeah, I mean, looks fine here, like middle of the range, just when it can continue to see this expand higher. But again, above 1, net calls are in control. Again, delta balance, same thing, right? Guys, you'll see, you know, we kind of just do the same systematic process every single day. It may be boring, but it's just how you understand, contextualize the markets, and really are able to identify those kind of changes in structure from day to day. Again, delta balance pinned at 1, looks fine. Now 0DTE. Right, SPX 0DT, again, always start with our transition zones. Again, the implied open, 67.35. Opening slightly just below the top of our drunken sailor range, but we are above the top of the DEX transition zone, 67.20 there. going to be a key line in the sand to the downside. Again, 6,700 psychological level, Livermore level, all that good stuff. Going to be a kind of a key downside level. And then to the upside right now, top of our drunken sailor zone is at 67.45. So again, our drunken sailor zone, those are just two critical goalposts in the structure itself, right? So it's an evaluation of pre-market positioning, what we call synthetic open interest, right? And so you can just kind of understand it kind of starts from the middle of transition zone and just think of it as like a boulder being pushed up a hill. So we're trying to identify that point where we're kind of at the peak and about to grow over the crest. And once we get over the crest, then it's going to be a lot easier to move higher or move lower, assuming that we have, strong intraday action supporting that move. So when I say supporting that move, that's through the market trend model. We're seeing significant filter ticks moving higher for progressing higher, or seeing filter tick lower for progressing lower. And then that's also where we do all of our intraday volume analysis, our vol D command, vol U command, right? We're just measuring for SPX 0 DTE where volume is going into the structure. And then, heavily relied on command that we use, Gamma Edge, is the vol U command, right? Which is SPX 0 DTE. We're just monitoring the behavior of speculation, right? Both on the call side and the put side. Something called a centroid. Every 5 minutes we aggregate that call volume and the put volume, right? And then we find the middle of that distribution of the volume, which is called the centroid, and we plot that. So throughout the session we plot it, we connect the dots for you to create this solid green for calls, solid red for puts. And then let me just show you kind of an intraday example so you can better understand that. Whatever, so we'll just use this real quick. So you can see from the open until, 1355, which is 155, you can just get an understanding for how speculators have speculated throughout the session, right? And so, right above the drunken sailor range, we want to see continued speculation higher, progression higher, all that good stuff. So getting back to it, yeah. So I mean, those are the key goalposts right now. 45 to the upside, 70 to the downside. Then we kind of have a mid stopping point here at 20, which is the top of the DEX transition zone. So that's what we're going to be focused on here. Then really in the middle of the drunken sailor range, it's just a big chop zone, right? So trade within that as you see fit. But again, just know that the nature in here is generally choppy. And we start to see those trending moves once we break free of either the top or the bottom of the drunken sailor range. And then, just wanting to go through it real quick, we have detailed levels. I know I only went through kind of those core levels, but there's a ton of unnamed levels that we go through, if-then statements, just understanding if we break above the drunken sailor range, then what do we expect to go long? What do we expect to go short? All that good stuff. NDX, I could not understand in connection with SPX divergence 0 DTE. Yeah, we can get to that in a minute. Are you referring to the pre-market prep notes, or is this just an observation that you had? Barton, I'm talking to you specifically. But anyways, that's kind of the pre-market prep. Let me know if that answers your guys' questions or not. Happy to go through more. Well, yeah, I know looking at the tool, but when you make the comment about SPX divergence, is that an observation you have, or is that one that you saw us make as part of our pre-market prep? I'm just trying to understand where you got that from. Last tool I wanted to know real quick is our 3D this is a NetStat tool, right? And it's a 3D, it's a summarization of our 3D surface models. So if you know 3D surface models, 3D surface models, right? We have all the key Greeks. 3D surface models, right, are kind of look like mountains. And so we just have a summarization of those because we understand those may be tough for some people to look at to understand kind of what the key parts are. So the way you can think of about that is a left-hand strike, right-hand strike. Those are peaks. Think of those as kind of the peaks in the mountains above them, those spot prices. Those are the key strikes or key sensitivity points where that Greek kind of has an outsized influence at those strikes. So we have net delta 6,700 across all Greeks. That's going to be a key line. in the sand gamma 6740, which, right, if we accelerate 6740, yeah, that's right. And then to the upside, right, 6815, that's a massive strike. That's well above spot price, so may not be a factor per se today. Yeah, I mean that's COI, so that's why that's a dominant strike. Yeah, I was looking at that real quick. Yeah, that's yeah, because it's outsized influence there, but yeah, but yeah, the key thing to know here is, right, we can get a quick snapshot of, especially Charm and Vanna. The Charm, right, net all things equal, is going to be a negative headwind on us today, and that kind of makes sense. Just, I guess, given the amount of deltas that far up in the structure. Let's see what we noted. Let's see what we noted here today. Yeah, going to be a slight headwind. Yeah, again, just, when it comes to Vanna, we're simply, kind of saying watch volatility go either way today. Had a nice deep dive last night on, Vanna, how we think about it, because we had two nice Vanna call-outs last week that were fruitful for us, so we pay a lot to Charm and Vanna intraday. So yeah, I'm gonna transition to swing trading real quick. I know the market's open, so if you guys gotta drop off, see a lot of people already have, so no worries there. Yeah, so a game edge, right? Swing trading, it still comes down. We're painting the picture with our SPX game plan, especially the full complex analysis. Reason we do that, SPX, right, is so, I mean, it's massive. The options market is huge, and it gives us a really good kind of peek into sentiment of kind of the general market. And so understanding how the SPX is positioned gives us good insight into, if the environment is good or not for swing trading. And then also, our market trend model built off the tick index. Unique thing about this is that it is multi-time frame. So we have short, medium, long term, so we can understand that. Something I want to hit on real quick, I forgot to. So for those folks that are new, I know either options market analysis, Game Edge may be new to you. So if you go to our website, go to free courses, Game Edge Fast Pass. We've designed this to accelerate your learning curve with all this stuff. Everything a paid member gets. So, it's all the education, right? All these terms that we've been using, all these tools. There's, documents that go through all this, how to use it, all that good stuff. So it's all of our tools, methodologies, frameworks, strategies, all that good stuff. So feel free to give that a go if, kind of what we've been talking about today seems interesting or not. Or just keep tuning into these videos. Maybe some will click for you. But yeah, looking at the market trend model, our long-term kind of bullish signal, I'm just going to call it that for now, had turned on last Wednesday. And so, nice continuation higher. So what that does is that turns on our P2P and our wheel strategy. Going to P2P real quick. This is 100% mechanical strategy. You're going to know your entries and exits the night before we open. So today, JPM and Visa, those were the two candidates that were triggering entries today. Exits, nothing. And this is just results of our portfolio. We've been running live since July of 23. And if you go to the Game Edge Fast Pass, we have all of our back testing documented from 2012 or 2013 to current day, sliced up by different kind of significant time frames, just so you can see how that performs relative to SPY. The results are very good. So if you're looking for kind of a mechanical strategy, you may not have a ton of time to get dedicated to the market. Swing trading time frame, right? Certainly something to look at, right? The duration of an average trade is 39 days. So yeah, last things I'm going to know here, right, is high win rate strategy, positive expectancy since inception and year to date, fairly similar, mirrors the back testing, all that good stuff. So if you're interested in learning more about that, either come on into the Discord, go read the Game Edge Fast Pack. We have a blog article on it as well, so you can do that. We also recently launched the wheel strategy, right? The wheel is not new, right? It's just selling the cash secured put. Right, the stock either moves higher and you collect that premium, or you get a sign and you sell calls, and hence it's called the wheel. And so we've just put our own flair to it, right? We're looking for call dominated stocks, and we have something called the Minervini trend template. Mark Minervini, successful individual investor, came up with a way of kind of identifying those stocks that have institutional momentum behind them. So if we know the stock is call dominated and has institutional momentum behind it, that's a really good candidate for selling puts on, because ideally, right, we sell puts and they expire worthless, or you collect 50%, 90% of your premium, and then you just keep recycling your capital, right? So those are the two key criteria that we use to identify those stocks that we want to be participating in when it comes to the wheel strategy. And then we have other factors to the model, like which specific strikes to select, which specific expirations to expect based off the return of the trade that we're taking. So we use a rate of return on the option of 1%, and we have an annualized target as well, so that informs which strikes we are selling. So that's in the Game Edge Fast Pass. That full write-up on that strategy is in there as well. So if that's we also just recorded a video actually on YouTube a couple weekends ago. You guys can go watch as well, or just ask more questions from there. And then lastly, in our swing game plan, right? It's not as robust as the SPX game plan. SPX game plan does a lot of the heavy lifting for us, but what we do here too is I just add some supplemental watch list that I like to track. Other people like to track too, right? We just look at couple bullish lists above P trans, below P trans, call dominated, above 2150 moving averages, just because those are just technical momentum things that the market pays attention to. So there's no reason we shouldn't be applying that. So these are just good candidates for long entries. And then we have a bear list, which if you're not shorting, that's fine. These stocks just shouldn't show up on your long watch list because they're put dominated, negative momentum, all that good stuff. And then all those lists can kind of be like visualized in this scatter plot that I'm working on, which simply put, what it is above the x-axis means that it is below plus GEX, which is good from a bullish point of view because that's our profit. That's our first upside profit target. So as an example, Intel is roughly 7.5%. Has 7.5% upside to plus GEX. And then to the left of the y-axis means that the stock is currently above P-trans, which is good because P-trans is kind of our key, entry acceleration level, to where once we start to get into the call dominant environment, start to get that expansive call environment, we expect a progression higher. So that's where the P-trans to plus GEX strategy, that 100% mechanical, is predicated on these two levels. And so we know these two levels are very important because that 100% mechanical strategy we have has edge to it, positive expectancy, significantly outpacing SPY buy and hold over really any time frame you slice it up. So that's why, from a discretionary point of view, we're kind of looking at these stocks too, right? Because I know not everyone likes to do mechanical stuff. They want to feel like they own it and do their discretional trading. So this is just an easy way to visualize kind of those stocks you should be looking at. So like Intel, it's call dominant, right? And all these stocks are call dominated. Just want to say that as well. So 7% upside, 1% downside or whatever. So, decent candidate. We got Google, we got Lyft, WDC, BP, Snap. Yeah, so you guys kind of get the idea, but all those stocks are captured within these bullish watch lists as well too. So, yeah, from there, happy to go through any specific stocks you guys want to look at. I know it's 9:40. Been here on here almost 30 minutes. So it's not a ton of you guys left, but if you guys have specific questions in individual tickers, let me know. Barton, we appreciate your questions. They're very useful. I'm sure someone else was out there thinking the same thing. Yeah, let me know if you guys have any individual tickers or want to discuss anything I talked about. We can go from there. So SPX right now, a little bit of a sell-off. 67.40 is where we... Yeah, so not able to get above the drunken sailor range. Right now we are at 67.28. So yeah, just kind of right smack dab in the middle of transition zone, prior day range, all that good stuff. So looking at market trend model. Yeah, I mean we're 15 minutes into trading right now, so no significant ticks either way. Oh, apparently here with a nice move. So alright guys, we're going to wrap it there. I don't see any questions coming in. So we appreciate the time. If there's time this afternoon, we may try and do a intraday stream just to kind of see what we're seeing on 0DT front, see if any stocks are doing anything. So with that, I appreciate the time. You guys have a good one. Thank you.